Hello, my name is Craig Earlham, Senior Market Analyst at Oanda, and in this video we're going to talk about gold. Now, gold has been one of the charts which I've personally been following for quite some time. We've moved above these $1,300 levels and it was looking quite bullish for a while, and then we started to see it topping off around those kind of 1340, 1350 levels, and we started to see it pair those gains. Now, we've seen a bit of a corrective move, and what's been interesting since we've seen that corrective move is that we haven't seen that momentum shift back to the upside. We saw it break through to 1300 once again, which I think was quite a significant tell. We came back towards 1280, and while we have rebounded slightly above 1300 at this moment in time, we're not really seeing that upward momentum building. And I think there's a couple of interesting things that we can read from this. One, it would suggest that there's potential for some more downside moves. The move that we saw prior to the peak around the 1340s was quite a long move. It took place over a number of months, and we saw quite a considerable rise. So the correction that we've actually seen so far is still quite small in comparison. The other thing that I think is interesting right now is the fact that we have seen the gold rise over the last 10 or 11 days or so, but compared to the moves that we've seen in the dollar, it's actually been quite small. Quite often when we see dollar weakness, that can be a positive for gold and vice versa. Well, we've actually seen quite a lot of dollar weakness over the past 10 or 11 days, and the rise that we've seen in gold have been much smaller by comparison. And when we saw the reverse on the way up, that was quite a bullish signal for gold, and we continued to see that rally materializing. So on the way down, this looks like quite a bearish signal in the near term. Where we go beyond that could depend on where the dollar goes. And tonight we have a very important Fed meeting. The Fed will meet, it will release its new economic projections alongside its decision on interest rates and other monetary policy measures. Now, the market is very much confident that we're not going to see an interest rate hike at this meeting, so that seems a foregone conclusion. But what people want to know is what we're going to see going forward. So the dot plot's going to be is going to be very important here, and also the views on the economy, so on growth and inflation, and then the market will make up its mind on where we're going from there. At this moment in time, the market is pricing in no more rate hikes this year and very little possibility of any. And as the year materialises, there's actually an increasing probability by the markets of an actual rate cut culminating at the start of next year in a potential rate cut, where the market is a little bit 50-50 at this moment in time. The Fed is not going along with this at this moment in time, but the markets are banking on a much more dovish message coming from the Fed to confirm this. If we get the flip side of that, then that could potentially be that could be a bullish signal for the dollar, and therefore potentially weigh on gold. But I think very much in the near term, it all hangs on what the Fed says tonight. Often in the past, the market has ignored the Fed when it's not given it the message that it wants to hear. But tonight, that could be very different, because the simple fact of the matter is the economy is still performing relatively well, and while I don't expect the Fed to actually announce anything in the near term that would suggest we're going to see a rate hike in the coming months, if it very much sticks to its belief that we'll get one more rate hike this year and one or two next year, then that could have an impact on the markets, because expectations are so low currently.